Hello everyone, just signed an AST with a tenant. New property that we've had refurbed. Got a tenant in there, going to start the refinance process pretty soon. Paying above market rent, which is good. And yeah, nice little deal that we've got going on. Hopefully be able to refinance and pull out the vast majority of the initial funds that we've got in. Maybe leaving a little bit of the refurbishment costs in, but other than that. I just wanted to talk very briefly on a deal that we put together early today. We were going to buy a property for 240 grand, and the bank that we have gone to are just playing all sorts of games, asking so many different questions. It's been an absolute pain in the backside. So we've been able to create a deal with the seller, and I'm going to talk about that and run through it a little bit later with numbers on a screen or whatever, because we were able to basically save ourselves 30 grand, and it's quite a creative deal structure. You still need to put money down into it, but a lot of people do have access to capital, they just don't know how to utilize it properly. So if you do have money but you've got bad credit, the strategy that I'll talk about in the video a bit later on is perfect for you. And this is the thing again that I've spoke about in past videos, is that it's all about the tools in the toolbox, using the right tool for the right situation. What tool do you need to bring out the toolbox to fix a problem of the seller? And in this situation, the sellers trust me. I've been trying to get the deal over the line with the bank for a few months, and the bank have just been a nightmare, asking loads of questions to do with the tenancies, because it's a multi-commercial property, meaning multiple little commercial lots, like a HMO, but a commercial HMO. And the bank have asked all sorts of stuff. So we've done a deal now whereby we don't need all these bank's approvals, and we've got 2 years to finance the rest of the purchase. So I'll talk about that now. So let's walk through all the figures, and I'll sort of share with you why I structured it this way and why it's beneficial for both parties. So originally, the price that we are paying is £240,000. Okay, that's not changed. That's stuck the same. The mortgage that we were going for originally was around £160,000. The payments on that, I haven't got all these 100% in front of me, but they were about 1,400 per month, and that was, I believe, a capital repayment mortgage. So you pay some of the capital off with every payment you make, and obviously our down payment there, or deposit monies. The difference between there was 80 grand, and then you've got your stamp duty and legals and all that stuff on top of that. So that's the very basic numbers on how we were going to buy it, with a traditional route of getting a mortgage, putting a down payment down, yada, yada, yada. Now, the reason that this needed to change was because the lender were asking so many different questions. I think they were going to try and drag it out as long as they possibly could, to not make a decision. Basically, I set myself a deadline that if we hit that date, I was just going to pull out and tell the lender that we weren't going to use them for this specific deal. That time passed. I picked up the phone to the broker. I said, let them know, this is the situation. We're not going to work with them on this one. They weren't happy, but I did tell them a couple of months prior that this needed to wrap it up quick, because the seller was getting very impatient, and rightly so. But over the 9 or 10 months that this thing's been going on, which is far too long in my opinion, I built a good rapport with the seller. Her husband, they do own it jointly, but she's been working with me on this deal. And she's a lovely person, and we've really got to know each other well. I picked up the phone to her as soon as I pulled out with the bank, and I said, listen, this is the situation. Can we do sort of like a creative deal structure that works for both of us? Obviously, you've got to frame it up in a certain way that you don't scare the sellers. But because this person is commercially savvy, it's easy to conduct business with. Another reason why I love commercial property, right? So this is the deal that we've struck. Now that remains the same there, the 240, because we didn't want to change the price that we'd agreed. I mean, a lot of these like fast buying companies, they agree a price, 100 grand, and then a week before they complete or something, they try and drop 10, 20 grand off the price. That's so unethical. They shouldn't be doing that. It does go on quite a lot. We don't do that. I picked up the phone and I said 240, that doesn't change. We've agreed that price. If for whatever reason she wanted to put the price up, we could have done a deal on that, to be honest, because she's been 9 or 10 months without any real movement, which isn't good enough from our perspective. It's not good enough for her, not good enough for the lender. She's not good enough all round. The legal process, absolute nightmare. So we've got here, we stick with 240, but I turned around to her and I said, listen, do you need all the money today? Is there any reason that you need the whole 240 today? She said, no, we're just going to pay off some of our mortgage on her principal property. So I know her mortgage isn't that big, right? It's a lot lower than that. So we come up with a deal that we would pay her a deposit of £50,000. We'd then make monthly payments of £1,200, of which 100% of that monies comes off the price. So 50 grand down, that's 190. 1,200 times 24 months, that's 2 years. And in 2 years' time, you have to pay them the balance off. Now, it's there or thereabouts. In 2 years, £161,000. In 2 years' time. Now, if you remember correctly, in the original deal, we had to put down 80 grand. The monthly payments were around 1,400, of which only a small portion come off the capital, off the equity, right? Now, we're saving 200 quid every month, and we don't have to put 30 grand into the deal. Essentially, what the seller is doing there, providing us this bit here, is giving us an interest-free loan for 2 years. So in 2 years, they're basically there or thereabouts giving us a £30,000 interest-free loan. And that figure, the difference between that and that, which is 190,000, the 190,000 is being secured like a mortgage, like a normal first charge lender on the building. So if we default on these payments, here she can repossess the property. That's her security. Again, if this property, if I had put this solution to her at the beginning, may not have worked because of the rapport wasn't there. After 9-10 months of trying to do this deal and getting it through the lender, I sort of framed it in such a way that the lender was the bad guy because they were being really inefficient, which they were, and we could do this deal. Everybody's happy. Now that there's going to pay her mortgage off for the next 2 years. That's some pocket money for her. And in 2 years' time, this figure here, the 161, can be refinanced, or we could sell the building. You could do what you want at that time. But don't forget, this was cash flowing £26,000 per year, and we've got a £1,200 per month mortgage, which works out to, is it 14,400, I think, off the top of my head. So you can see the cash flow there is there or thereabouts. For the sake of round figures, you're looking at £12,000 per annum with an interest-free loan. So from a buyer's perspective, that's a perfect solution. Did it work for the seller? Yes. Would she have probably preferred the whole lot today? Probably. But she knows that we're going to perform on that. That, in my opinion, can be done in well within 28 days. No lenders are required. if you're going to do something like this, I do suggest getting your searches done and all that other legal stuff. Make sure that, especially commercial stuff, make sure the leases are good. If you've got residential tenants, make sure they've all been let properly, AML checks, ASTs, all that other good stuff. But the legal guys can put all that together. Again, think like there is no box there. Don't put yourself into what should be done and shouldn't be done. The deal can be created however you want the deal to be created, and it's the solicitor's job to make that a legal reality. I hope that sort of shows you how asset acquisitions, property, but also businesses, this happens all the time in the business arena, creative deal structuring, how things can be done, particularly when there's no mortgage. Now, if there was a mortgage on this property, that would have been more difficult. That 50 grand could have paid it off, and then she could have secured the rest with a charge. But in this scenario, it was perfect. Ideally, this figure here, we could run that for, if you could do it for 10 years, that would be absolutely perfect. And there is no reason it couldn't be done other than the seller's situation. I mean, if you can get interest-free mortgages off sellers, you're absolutely laughing all the way to the bank. But, you know, these things are very, in comparison to normal property buyers and sellers, these are quite rare. You have to know what you're doing. You have to be confident. You have to have good rapport. And you have to have a good team around you, good solicitors and everything around you to make things like this happen. I think one of the takeaway points from structuring a deal like that after, you know, things didn't go quite according to plan, as often happens, is that you have to be both proactive and reactive. You have to both be comfortable reacting to situations as they change, whilst also being proactive with how you see the deal structure being completely different to what it was originally negotiated, and always have your finger on the pulse in that aspect. If I'd have put that deal to that seller at the beginning, it probably wouldn't have worked. Even after doing this for so long, I know when and when not to propose things. If I'd have proposed the vendor finance type structure to her at the beginning when there was no trust there, probably wouldn't have happened, 90% sure. But because I was like proactive with it, I was like, listen, this deal's not going to go through with this lender. It's going to take another 3 or 4 months to wrap it up, but we can get you 50 grand in the next couple of weeks. Let's get it tied up. You'll secure it. Your interests via a loan on the property, first charge given. That's a proactive response based on external circumstances. And I think with the level of trust that we've got with her, we could get to the 2-year point and then even renegotiate based at that time and say, do you want to roll it over another 12 months? It might help their tax position, which once again would be another proactive decision, a proactive action, rather than just, you know, doing what is normally done, which is what most people do because they don't think outside of anything other than normal. So once you put these things across, it's not your skill to make it legal. That's solicitor's job. You just put the deal together and then say to the solicitors, let's make this work. How do we make it work? And if they say it can't be done, you say, well, I'm going to have to go to somebody who tells me it can be done, because the vast majority of the time, all you have to do is rearrange paperwork, use different paperwork, and the deal can be put together. So if a solicitor is very stuck in their ways and they say, like, you know, you can't do it like that, X, Y, Z, you say, well, okay, well, this guy said it can be done and he's going to charge me a bit more, but he said it can be done. So do you want to do the work or not? And that's very often the stance that I take. The solicitor I work with now is very, very good. He's never had an issue with anything. We pay him accordingly. But surround yourself again with these people who are action takers and go-getters and go-givers, the ones who give everything that they've got in order to make your business better, and in turn you make their business better. There's a good book actually called The Go-Giver. Go and check that out. That's good. I hope you got something from that video. I mean, it isn't a no money down. It isn't, if you've got no capital, you wouldn't be able to do it in that instance, although you can in others. I'll do a video about it in the future, how you can do it no money down as well. But again, just think outside of what is normally done. They say think outside the box, but the reality is there isn't a box. You just create what's there in front of you. You react to external circumstances and you create a deal structure that works for everybody. This is an issue with negotiation, is that one people think they need to beat the other one. It's like a zero-sum game. And just that ain't the way the world has to be. Again, there is no box, it's not normal. If you want to work together with the other side of the negotiation, that's usually in business the best way to do it. I don't understand why it's like, oh, I'm a great negotiator, I managed to get the price down to this. And I'm like, yeah, but you screwed him, that ain't a good deal, because he's never going to come back. You're better off giving something away. It doesn't have to be money, it can be something else. You can add value in other ways in order to sort of level that out. And that's what I try and do, and that's what I think I've done with this deal.